Inventory has been tight in the housing market and it's pushing up prices, but the busy spring season could see a shift. Home sellers are relisting their properties at the fastest pace in a decade. A new analysis from Redfin found nearly 45,000 homes that were previously pulled off the market were relisted in January. So instead of cutting prices, sellers had decided not to sell. Are they now having second thoughts? Or, Jonathan, are they just coming back and saying, all right, spring is in the air, let's give it a shot?
I mean, the old saying is you sell when you can and not when you have to. So maybe they didn't like the prices they were getting previously, but now some of those sellers might be realizing, look, the market itself is repricing. You have more inventory on the market this year. This is just a fact. About 7% more inventory in terms of single-family homes year over year. The fact is, government, unfortunately, is still at the center of this. I mean, between Fannie and Freddie, government guarantees more than half of all mortgages. But look, we want to see real estate prices repriced. Basically, millennials and younger have been completely shut out for years. So we want more supply, lower interest rates, more homes on the market, and that's what we're seeing.
You know, what I love about this industry, Jackie, is I feel like it has been so ripe for disruption. I was a seller, pulled it off, pulled it off, finally sold, cut the price, was like, let me walk away. Buyers knew that because you can see the price listing history.
Yeah.
They don't have to go through a broker anymore. This has been so ripe for disruption that I'm not saying it's bad that homes are coming back on the market. But if I'm a buyer, I can look at all of the previous listings and I've gotten really, really smart. I wonder if that actually helps or not.
I think that does help. I think that gives them a little bit of an advantage if you're a smart shopper and a smart buyer. But I think what's really happening here is the mortgage rate. So I'm on FreddieMac.com, and the 30-year fixed rate for mortgage is right at 6%. I believe we reported it went slightly under that last week.
598.
But the 52-week range for this mortgage was, the 52-week average was 6.45.
Yeah.
So you've got rates down 0.5%. So if the seller didn't have to sell last year and they decided, I want to stick to my guns and get my price, I don't need to move this second, I'm going to pull my home off the market, I'm going to wait for rates to come down. They've come down 0.5 point, same seller goes back on the market, roughly in the same ballpark price range, and probably will have more opportunity to catch a buyer here. So that's what I think is happening. I think if you can get to 5.5, you're going to see even more people say, let's sell. They're looking for the price cut in the rate. They want the person to get their payment down on the rate side of it, not on the purchase price side.
Let me build on that, though, because I think we hit an interest pivot point recently. The number of mortgages that are outstanding that have a 6% or higher mortgage rate dipped below, for the first time in years, the number of mortgages that are at 3% and below. So now you got about 20% mortgages, 6% and above, 20% below 3%, and the rest, the 60%, is somewhere in the middle. So I think that's an enticement as well. I think, to your point, it's the rate coming down, and then does the psychology change, right? Because no one's really making a decision on a quarter of a basis point necessarily, but do they believe the market's getting better, that they can get more opportunity, they get more for their money? That psychological impact of it is improving, because I think at the end of the day, that matters to home buyers. You're thinking about an emotional investment, not just a financial one.
One quick thing, just on the rate, also remember that's just the 30-year average that we're looking at. If you're getting a jumbo loan, if you've got excellent credit, you're going to get a much more competitive rate than even that. So, some people can qualify for loans like that, and they might be, back out there saying, okay, maybe it's the time.
Brian, my worry with the conflict going on in Iran is if we get 5.5 mortgages, that means the 30-year has to fall, which is signaling either deflation or a recession. And right now, given the news, to me, it would be signaling much more of a pullback in consumer, that demand shock. Does that Toulouse point change the psychology around, I want to hold off on a big purchase, I'm not quite ready, I don't really want to commit just yet? How do you think about that?
I don't know. I think I can't read the psychology of it. I mean, I think when you want a home, you want a home. I can't. Everybody, if you want a home, you want a home. Here's what you're doing. You're on Zillow 5 times a day looking through listings, right? You want your home. You're just looking for the reason to buy. So so I don't know how Iran's going to play. I don't think it's going to. I think this is going to be sorted faster than it's going to affect the housing market. I think the housing market's getting better.
Okay.
I really do. I think these signals that we get show there's more supply. I think now it's just a question of have you been positioning yourself to be a part of this? Here's my concern about it, because we get these articles about Gen Z all the time, and like they can't buy a home, da-da-da-da-da-da-da. So I live in like Gen Z Disneyland in New York City, okay, in like East Village area, and I spend a lot of time, especially on the weekends, because I like to go buy records. I run into these kids all the time. They are not living like they have no money to spend.
Oh, they spent all their money.
My
They're not saving
goodness.
anything.
This is the opposite of what you did.
They spent
right?
all their money.
So I'm like, I literally, this weekend I was thinking about this. I was walking around. I'm like, these guys they're outspending so much money. And they're the same ones complaining to Mamdani about the cost of living and like affordability. I'm like, dude, make a budget. You can't buy a $50 record, okay, which I'm not gonna buy, and then tell me that you can't afford your rent. Like, you need to make choices here. So I think the market's getting better, and I think people who have prepared for it are gonna get in on it, and people who haven't, like, I'm sorry, don't complain if you're not making a budget and you're buying $12 cups of coffee, you know.
I agree with you. You're
Or
preaching to
more,
the choir
whatever.
Poor
here.
husband, he tried
Only
to do the
$20
right
records.
thing.
Yeah.
He called me up over the weekend. He said, Taylor, would you like a coffee? And I was like, I don't know how much is it. I'll just make one at home. He's like, I'm trying to do the nice thing. Can you just accept the cup of coffee?
Give him credit for that. That was a nice thing.